Welcome back. AUD USD is back above 0.660 after a brief dip below that level this morning. And it's all because of fresh US dollar selling. Overnight, the US dollar index, which measures the greenback against a basket of currencies, hit a low of 102.97, its lowest level in nearly 2 weeks. And this happened after another disappointing US data release. You see, the US Producer Price Index rose 0.2% in August, which was less than the 0.3% increase that economists had expected. And this follows yesterday's soft retail sales report. So the market is starting to price in the possibility of the Fed cutting rates sooner than expected, which is weighing on the USD. In reaction, AUD USD rose from around 0.657 to a high of 0.6620 this morning. But it wasn't all smooth sailing for the Aussie. The pair fell back to 0.6605 after the release of Australia's employment data, which showed a 0.1% increase in the unemployment rate and a 0.3% month-over-month increase in full-time employment, which was below the 0.4% rise that economists had forecast. So this morning's gains were mostly driven by USD weakness rather than AUD strength. But looking ahead, the near-term outlook for AUD USD remains bullish as long as the US dollar continues to fall. In fact, the technical outlook for AUD USD has improved since our last bullish outlook on September, as the pair has since broken out above the previous swing high at 0.6560. The next resistance level is now at 0.6650, which is the 200-day moving average. And if AUD USD can break above that level, then the path of least resistance for the pair would be towards the 0.670 psychological level. On the other hand, if AUD USD falls below the 0.660 level, then the recent swing low at 0.6560 becomes the pair's new support level. The 200-day moving average has been a key level for AUD USD this year. The pair has struggled to sustain moves above that level in January, March, May and July. A break above it in early August turned out to be a false break, and AUD USD fell back below it by mid-August. Will history repeat itself this time? Now we know that China's central bank lowered its daily yuan reference rate to a nearly 9-month low today amid fresh selling pressure on the currency. But given that the Australian dollar is also a risk-sensitive currency, it's not surprising to see AUD USD barely reacting to this news. Instead, the pair is moving in lockstep with the US dollar index. In other news, oil prices rebounded overnight after falling for 3 straight days. Brent crude futures rose 1.4% to $91.68 a barrel, while West Texas Intermediate futures rose 1.3% to $88.67 a barrel. The recent sell-off in oil prices was triggered by a stronger US dollar and concerns about a global economic slowdown. However, those concerns may be starting to fade, as the market is now pricing in a potential pivot from the Fed in 2023. WTI has support at $85 and resistance at $95. That's all for today. Thanks for watching and see you in the next video.